Hi guys, it is Pila here. What I want you guys to see today is that volatility 50 index. It's a simple volatility pair to trade as well. It is just pure price action. Always remember when we approach the market with pure price action, you need to look for something that they presented you with here and to look for things that you want to see. Always remember when you open your chart like this, you must look for the direction of the market. After seeing the direction of the market, now you know that the market is going up or you know that the market is going down. What do? You then go to another time frame to look for what? To look for possible entry points. Now already you know the direction of the market. Unfortunately, if I'm using um tariff trading view, I don't have weekly and monthly. But if I'm using the app, I have weekly, I have monthly, whereby I'd be able to see almost everything. Now, I want us to focus on this trend. This one is very much important in a way that it will make you understand almost everything. Remember, I once said when the market is going up, we focus on the previous trend. When the market is going down, we also focus on the previous trend. Or let me just say, when the market is going up, we focus on the previous downtrend. When the market is going down, we focus on the previous uptrend. That's where the market's gonna turn. So now looking at this, I once mentioned the other day that when the market is going up, approaching your trend line, I'm sorry, your resistance on a higher time frame, the market will give you something like this. And then once they break below, that's a sign that the market is no longer going up. Now the market is going down. They will push back the market. And it doesn't matter how far they push the market. And then the next thing they push to the downside. Now you have a confirmation that the market is going down. Same applies when the market is going up. You're going to see the same thing. You're going to see the same thing. And then the market goes up. It comes back down. It continues with the trend. This is a confirmation to you that we are no longer going where? Going down. We're supposed to be creating lower lows. We can't create lower lows anymore. Excuse me. Here we're supposed to create higher highs. We cannot create higher highs anymore. It means now the market is failing to push to push to the upside. Therefore, what do? Let's say, for an example, we are scared to enter on the resistant level. That means you have to look for this setup. It's either you're gonna go to 4 hour, 1 hour, or 30 minutes to look for this set formation. But personally, when I use this information on a higher time frame, it becomes more accurate than when you use this information on smaller time frame because of on higher time frame when they will leave a break structure like this, even on daily chart, believe me, you when they come back to this level, they are going to move because of this is a confirmation from higher time frame. Now, if you will fail to understand this thing on a higher time frame, you just prefer to trade on 1 hour, you'll have a problem whereby you think that the market is going down. You'll forget about the actual trend. Let me make an example where you will be able to see what I am talking about. Here, you had a good setup. The market was going up. The next thing, they gave you this candlestick. I'm sorry, this downtrend. Let's go to 1 hour. The more you understand what is happening in the market, it is the more you become safer with everything that you do. Now, this is where the market gave us that downtrend. Let me zoom in. If this is where the market gave us the downtrend, look at how the market went down. You do not have enough experience. You assume that the market is going down. And if you wanted to get entries as well on this downtrend, you're going to be able to get entries. The other time I mentioned that you can also take a trend line and put it from here and push it all the way up. Once they break this trend line, it's a sign to us that we have broken the trend. Now, the market gave you a resistance. It went down to the continuation pattern on your left-hand side. The continuation pattern is matching with the trend line. It is pushing the market back up. The market is on your resistance level. It is failing to break above. Now, focus on the structure they gave you here. The market went up. It came back down. It went higher. It went below. This level was broken. The market went up for your entry. The next thing you see, the market is moving below again. It went higher a little bit. Continue with the downtrend. Now, already by seeing this on smaller time frame, you'll assume that no, you know what, the market is now going down. You start looking for entries that are corresponding with the direction of the market. You will lose the whole direction from higher time frame. Remember, on higher time frame, this is where the market actually turned. Let's go back to higher time frame. Always remember, if this is what you see on smaller time frame, you go to higher time frames, different. It's going to be a different thing that you're going to see. Look at what they did here. Just apply a line chart. The market went down. It went up. This is daily. This is flip. Still one. I want to use daily chart, not this one. Let's go back to daily chart. Look at what they did here. Remember, I said you follow the direction of the market, right? Let's erase. The market went down. It went up. It went down. Right. As it was going up, the market respected this breaker structure here. Can you see that? And then it went down. It went up again. A continuation pattern was created here. Already we have broken this on daily chart. Now, after breaking the resistance here, it was tested on the right hand side as what? As support after breaking it. Can you see that? Now, after they broke they broke the resistance, they came back to test it, and then they went higher again. Now, as they went higher, they come back. What do you have here? Your support level. You enter here. This is daily chart. You enter. Where you placing your stop loss? You place your stop loss somewhere here because you prefer not to trade on which time frame? On daily chart. You forgot about the trend. This is the formation that you trade in the market. Where were you supposed to take your entry? Accurately on the continuation pattern. As soon as the market touches the continuation pattern, that is your entry. You move with the direction of the market. I showed you this setup that this is what you're going to see when the market changes the direction. I will show you the candlesticks. You can see here that, okay, this is your resistant. This is your resistant, and then let me use black. This is your resistant level. It was broken. It became your support here. Now, as the market comes back to the support, look at what they did. Think of those who took their entries there on the support. The market went through. As much as the market went through, what do you have on your left-hand side? A continuation pattern. Now, your job is to wait for the market to break this and go up. When the market comes back, you know that you still don't have an entry yet. The market's supposed to break or supposed to respect and go up if there's nothing here. Remember, I said to you, when they leave things like this in the market, It's there to manipulate those who don't have experience. You know very well that we have people who are trading support and resistance. They'll be looking for entries where they'll be taking trades based on the direction of the market here. Let's say they'll enter there. Let me erase again. Let's say they decide that okay, our entry is gonna be on the support. This is our support. Still, even if that's your support, you place your stop loss on 15 minutes. You're gonna get something like this. Expecting the market to respect the support for the second time, the market goes through because of what we have below. It is a continuation of a trend. Therefore, the market to respect the continuation of a trend and continue with the trend. Hence, you can see the market went higher than before. Now, as we are moving to the right-hand side. You see here, the market started changing the direction. You can see the continuation pattern. The market went up and then it came back down. If you look closer here, you can see the formation again. The market broke this level. It came back. It did not respect the break of structure here. It went up instead. But now, when does the market respect the break of structure? In the middle of the trend and on the major resistance and the major support. For an example, still, as much as you'll be focusing on the major trends, look at this. This is your resistance level again, right? How many touches we have on the resistance? 3 touches. It was broken, the market went up. If you look closer, the market dipped inside here. What is it that we have to do now? We have to go down to smaller time frame to check what happened here. So it means we move to 8 hour. We move to 8 hours. On 8 hours, what do you get? We spoke about these things, guys. We spoke about these things. I said to you, you need to be careful when you approach support and resistance. Let's make another example of which is something that will explain what I am explaining to you better here. I said to you, when you approach the market, you need to pay attention to what happened before. Whatever that happened before is what we're going to use to our advantage, right? So here, they presented us with this resistance level. Can you see the resistance? Let me just highlight it. This is the resistance level. The market came back for the resistance as well. The market came back for the resistance as well. I said when I trade support and resistance, I pay attention to the touches. I'm gonna trade this one going down. I'm gonna trade the second one. I'm not gonna take the third one. Instead of taking the trades on the third one, I will look for entries on the moving trend. Why? Because of the more they touch the support or the more they touch the resistance is losing value. Now, how many people were expecting the market to respect the broken resistance as their support day? So many people. I'm on 8-hour chart. So if I'm on 8-hour chart, it means people were going to see the resistance and then they run to smaller time frame to look for what? To look for entries. They get their entry, they place their stop losses based on 15 minutes. Their stop loss is gonna look like that. What did the market do? The market just went through their stop losses. Even if you went to 4-hour, your stop loss was gonna be on our entry. Can you see that? The market went through again. Why was that? This is 4-hour chart. You have a continuation pattern here that caused the market to go down. This is your continuation pattern. It means your entry was supposed to be on the continuation pattern and then your stop loss below the continuation pattern. This is the reason why today we have a number of people who don't believe in support and resistance. They believe that when they trade support and resistance, they take losses. The reason why they believe that when they trade support and resistance, they take losses, they can't differentiate a right support that they're supposed to take, a right resistance that they're supposed to take. When I say your job is to look what happened or to check what is it that they did on their left-hand side. So, same time frame of which is 8 hours, there's your resistance again. Your resistance was broken, the market went up. It came back to the broken resistance to test it accurately, and then the market went up. Why? There's nothing they did here before they break the structure. That one is very much important. Once you know that, oh, okay, before the market breaks my structure, this is what the market's going to do. That means my job or my focus is going to be where? It's going to be on whatever they did here. If there's nothing, then that means I can feel free to enter my trades there. So most of you or majority of you are used to that. Oh, when the market breaks my structure, my job is to wait for the market to go up and come back and test so that I can enter. They test, you enter, the market goes to your direction. You become excited. You identify the same resistance above, you do the same thing here. The market goes up, it comes back and hits your stop loss and go deeper. Now you are not brave enough to take another break of structure. Why? You will think of the same thing that just happened. I showed you again. Let me erase using another example. Here is your resistance level. Can you see the resistance level on the same time frame? We don't have any candlestick or anything we can use that came back to test here. But if you look closer, the market dipped inside the support. This is 8-hour chart. If I were to ask, how many of you have traded on 8-hour time frame? Might be one or two. All right. Now, what is it that you do? You do the same thing that I just explained, that when you approach your chart, don't look for what you want to see. Look for what they presented you with. On this chart, you see that, oh, okay, there's my resistance that was broken. We're supposed to be testing the resistance that was broken as what here? As support. But the market broke the the support here. And then the market closed below. It closed below again the same resistance. I'm sorry, the same support. It closed again below for roughly I would say a day. The market is failing to move up. But if you look deeper, there is a reason for the market to do that. The reason is on your left hand side. I said to you, the more you invest time here, you'll be able to see such things. There's your trend line there. Your trend line is the main reason that caused the market to go deeper. If you look closer, the market is failing to break this trend line. And then the next thing, the market goes up. If you look closer, look at the structure. The market went up, it came back down, it went up. What do you have here? A support. But the market went through the support. The market went through the support. In this situation, what is it that you have to do? You have to move and check what is it you have on that trend. Let's move to smaller time frame. Once you start approaching the market this way, you'll never have problems. You didn't move? Okay, you check again. What is it I have here? Remember, there will be a reason for the market to turn here specific. We might not see it right now, but as we are going down with the time frame, it's going to show up. We're moving to 2-hour chart. Moving to 2-hour chart. On 2-hour chart, we don't know what we have, but we'll know once we get there. This is where the market actually turned. Now, some of you, you know this pattern that caused the market to go up. This is 2-hour chart. The market just went through this support. Someone might even ask, is it always the case that the market's gonna do this on the support or on the resistance? This is pure price action, and then they manipulate the price action. Actually, is it correct for me to use the word manipulate? Let me just say they are not manipulating anything. They are just messing with those who are new in the market. Remember, you guys know how to trade support and resistance, so they're gonna use this information against you. But now that you know that I've showed you how to approach the market this way, you know that you don't have to find entries here if there's something there. You can see where the market turned on that continuation pattern. You already know how to approach continuation pattern. You have my ebook. Everything's available on my ebook. I gave you what's this? I gave you almost everything that you can think of. I gave you everything that you can think of. But if you learn to approach the market this way, you'll find yourself safer than the person who will jump in for no reason. If I say to you, the market is respecting support and resistance accurately. Hence, you can see here, that's the break of structure. How did the market respect the break of structure? I said to you, when you trade support and resistance, your job is to pay attention to the touches. How many touches we have on the support? It's 2 touches. I said when I trade support, I pay attention to the touches. If they have touched the support more than 2 times, I'm not going to enter because of they will break that support. Hence, you can see the support was broken, the market went down. It came back to the to the broken support to test it as a resistance here. Now, again, as the market comes back, your job is to check what is it you have here that can cause the market to go high instead of going down. If there's nothing, you feel free to enter. Let's move to the current price. This is what you'll get almost every day on your chart. This is Volatility 50 index. This is Volatility 50 index. If you will fail to approach your chart like this, believe me, you will have difficulties. Sorry, guys. If you fail to approach the chart like this, you'll have difficulties. This information, it is very much important for those who like to trade price action. If you like to trade price action, it is a must for you to know these things. And when you are trading on a volatility pairs, this is pure price action. As much as it is pure price action, you don't have to jump in on a moving trend. You do not have to jump in on a moving trend just because of you want to sell. That will cost you a lot because of if you jump in here, let's make an example. We are moving down to the current trend. Don't worry. Here, the market gave you an uptrend, a beautiful one, right? This is the structure that I was talking about here. Let's identify our support there on 1 hour. That's your support. And then this is the structure that I was talking about that you see, or we used to determine that the market is no longer going to that particular direction. Can you see that? That means our entry supposed to be here. All right. Now we get our entry, move with the market, we move with the market. Our job as we are moving up with the market is to use the previous trend as a reference to place take profits. All right. Now you apply your line chart. You check what is it you have. A resistance there. You come back to the current price. Okay, that resistance has a potential to change the direction of the market. That's your first take profit. The next target, it's up there. Right. Now, what do? You just wait. You see that the market is no longer going up. You got your first take profit, the market goes down. Umifigala, it reverses, it goes back up. That's when you start noticing this jump to 1 hour. That is where you start noticing that something is not right here. You move to 1 hour, you look at the market structure on 1 hour, you get your answers. Now you have to exit your trades. If you check, look at the structure, same thing that I was talking about, the market will go up, down, higher, and break that level. Once they break that level, your job is to wait for the market to come back to this level. It doesn't matter how long it takes for the market to come back to this level. Your job is to wait for the market to come back there so that you can enter and sell. The market went down, it came back to the same zone, you got your sell. You didn't lose anything. Instead, you went out because of the market is changing the direction. We're moving to the current trend. As I am saying, the reason for you to see this is because of what you have on the right hand side. Now, let's go back to 2 hour chart. The market gave you what here? It gave you a support. This is where the market turned and went all the way up. So this is your support. The market went through the support. It went back up to test the break of structure, right? And then it went down. As it went down, what is it we have that caused the market to change the direction there? A continuation pattern on our left-hand side. After reacting on that continuation pattern, your job again is to check up on that break of structure. What else do we have? We have a continuation pattern. We have a continuation pattern on top that will cause the market to come down. We have a continuation pattern that will cause the market to push a little bit up before it goes down. If you look closer, this is your continuation pattern. This is your continuation pattern here, where the market actually turned. Now the market is showing you that we are pushing to the downside. Now look at the difference. As the market is showing that we are pushing to the downside, what is it you get here? A support. This is your support. We have two touches on that support, right? And then the support was broken here. After the support was broken, what is it you have that can cause the market to go up there? There's nothing so far. Then the market went down. It went back up to test the break of structure. This is what is causing you guys a lot. It is because of you guys are used to this kind of break of structure. Now, from now on, we are now focusing on what happened when you trade the break of structure. That is when you start seeing the improvement. Whenever you are approaching your break of structure, your job is to check what they did before they break. Or there's literally nothing there. That means I can enter and place my stop loss above and give the market a space to breathe. The market continues to the downside. Now you have a support on your left-hand side that caused the market to change the direction. The market went up, you're resistant, it came back. Sorry, it came back down to the break of structure. The next thing, the market continued to the upside. There's your resistant level. The market continued to the downside. Now you see that, oh, what I have to do is just this as I'm approaching the market. Once I see this, I'm done. We are moving to the current price. This one is very much important, more especially if you want to find yourself becoming profitable using the volatility pairs. Let's go back to 4 hour. Going back to 4 hour, I'll have to erase everything so that the chart can be clean. Now, you apply your line chart here. You notice that we have a break of structure here. The support was broken. They went through. They're supposed to come back and test the broken support as what? As resistant, of which they did here. Now that we are on 4 hour, we don't have enough information. We need to go to higher time frame. That's where the higher time frame gets in everything that you do in your chart. Applying your line chart, you have to adjust your support. The market turned on the support accurately. We are done. This is your support. It was broken. It became a what on the right hand side? A resistance. Now on this 8 hour chart, here, this is your new resistance. What is it you have here that can cause the market to go up instead of going down? You see that, okay, here there's nothing. Let's check on the 4 hour line chart to see if we literally have nothing. We move to 8 hour chart. We look at the same trend, of which is this one. You then notice that, oh, flip, there's this continuation pattern only. That means the market will respect the continuation pattern and move to the downside. That's it. We are done. You then move again. Now the market went down. You have your support here. You have your support here. Your support have several touches. Can you see that? Support, the market went up. Support again, the market went up. We go to 1 hour chart. We go to 1 hour chart. As we go to 1 hour chart, look at what they did here. This is your support level. What happened? This is 1 hour chart. On 1 hour chart, you can see that all the market respected the break of structure. You can still mark the break of structure as a zone. Still okay. It looks like this. The market respected the zone level and then it went down again. Right now, if you look closer again on this one, you go roughly to 15 minutes looking at the current price, you can still see this movement. They have broken this support. I won't be surprised if they push the market up to this continuation pattern. And if they push the market up to that continuation pattern, the higher the chance that the market will reverse. This is 15 minutes. Again, this continuation pattern on our left-hand side is pushing the market to the upside. So you'd be up there approaching your market like this. Yeah, I know that when I approach the market, I must look for a break of structure. Here is your break of structure. This is your break of structure. Yeah, I'm on 15 minutes. When I see a break of structure like this, it means I must enter accurately and buy. If you'll find your trade on 15 minutes, you'll go to 1 hour time frame to look for something perfect. It's gonna look like this. The market will go through because you have a continuation pattern there. Are we moving together, guys?